Good day, students. Welcome to our video lecture series in financial management in agri-based enterprise in the Philippines. So in this video lecture, I'm going to discuss the taxation management. My name is Michael Victor Gonzalez, and I will be your instructor in this subject. Okay, so let's begin. So the tax system in the Philippines is governed by the National Internal Revenue Code of 1997 as amended. The National Internal Revenue Code is the primary law that regulates taxation in our country. It has been subject to various amendments and revisions over the years. So the main taxes in the Philippines include income tax, value added tax, excise tax, and other local taxes. So first is the income tax. So the income tax in our country, the Philippines, is progressive with rates ranging from 0% up to 35%. It varies to your income segment. So the tax is imposed on individuals or corporations and other entities. The tax reform for acceleration and inclusion, or also known as Train Law, which took effect in 2018, made significant changes to the income tax rates. Next is the individuals. The progressive tax rates for individuals are categorized into several income brackets. For the most up-to-date rates, refer to the latest amendments in the NIRC. So when you say progressive, a tax rate that increases as taxable income also increases. And in our corporations, uh, the corporate income tax is generally 30%. But some entities, such as regional operating headquarters, may have different rates. There are also additional taxes on the gross income of domestic and also foreign corporations. Next is value added tax. VAT is a consumption tax imposed on the sales of goods and services. As of my last update or last search of this subject, the standard VAT rate is 12%. However, there are zero rated and exempt transactions which are subject to different rules. So in the meaning of value added tax, according to Investopedia, is a consumption tax on goods and services that is levied on each stage of the supply chain where value is added. So from initial production to the point of sale. Next is the excise tax. Excise taxes are imposed on specific goods and services, so such as alcohol, tobacco, petroleum products, and also automobiles. Rates and classifications can vary, so it's essential to refer to the NIRC for the latest information. And then our local taxes. The local governments in the Philippines have the authority to impose local taxes, which can include property tax, business tax, and other fees. The rates and types of local taxes can vary between different cities and municipalities. Next is the estate and donors tax. So the Philippines also has taxes on the transfer of property through inheritance, which is estate tax, and donation. These are our donors tax. So please note, students, that the tax system in the Philippines is subject to change through legislative amendments. It is essential to consult the most recent version of the National Internal Revenue Code and related tax regulations issued by the Bureau of Internal Revenue for the most up-to-date information on tax rates, rules, and regulations. Additionally, Consulting to a tax professional or expert is advisable for specific tax related matters and guidance. Next is the income tax and management decisions. Since income tax and management decisions in an agriculture based enterprise in the Philippines are closely intertwined, proper management decisions can have a significant impact on the tax liability of the enterprise. So, the following slides are some key points to consider. First, consideration is the business structure. So, the first management decision is to choose the right business structure that you are going to take. In the Philippines, common business structures for our agriculture-based enterprises include sole proprietorship, partnership, and corporations. Each has different tax implication. And then bookkeeping and record keeping. Proper record keeping is essential. It helps in accurately calculating the income and expenses. This was been covered in our previous lesson, which in turn determines the taxable income. The good records can also help in taking advantage of deductions and exemptions. Next is the income tax returns. Ensure that income tax returns are filed accurately and on time. So here in our country, in the Philippines, businesses are required to file their annual income tax return on or before the 50th day of the fourth month following the close of the fiscal year. Then, deductions and exemptions. Familiarize yourself with deduction and exemptions available to agricultural business. The Philippines offers incentives such as the Comprehensive Agrarian Reform Program, tax exemptions for qualified entities. Take advantage of this to reduce your tax liability. So, according to Investopedia, tax deduction is a sum that you can deduct from your taxable income to lower the amount of taxes you owe. That is can help you save a substantial amount of money. Then the value added tax. This one, depending on your income and the nature of your agricultural enterprise. You might be liable for VAT and ensure that you are properly registered for VAT if required and that you comply with VAT reporting and remittance requirements. Next is withholding tax. So if your agricultural enterprise engage with suppliers, you need to be aware of the withholding tax requirements. So if your suppliers are subject to withholding tax, it's your responsibility to withhold and remit it to the government. Next is the investment decisions. So as part of our income tax and management decisions, management decisions such as investing in new equipment or expanding your operations can have a tax implications. So some investments may qualify for tax incentives, while others may lead to a higher depreciation expenses. So these are some of the things that you need to consider. And also your tax planning. So consider engaging a tax advisor to help with tax planning. They can provide guidance on structuring transactions and operations in a way that minimizes the tax burden. And compliance and reporting. Since compliance with tax laws is crucial, non-compliance can result in penalties and legal issues. Make sure your management decisions align with tax regulation. Then our government programs. So keep an eye on government programs and initiatives that can benefit your agriculture based enterprise. Some programs offer financial assistance, tax incentives, and subsidies to promote agricultural development. And also, we do have environmental compliance. So, in our country, in the Philippines, certain agricultural activities might have environmental tax implications. Make sure you comply with environmental regulations and taxes if applicable. Then, estate planning. So, we're going to discuss this further on our next lesson. So, if your agriculture-based enterprise involves significant assets and you plan to pass them on the next generation, so you need to consider this, the estate planning, to minimize estate taxes and ensure a smooth transaction. So we need to understand, students, that in the summary of our discussion in the income tax and management decisions, so in agriculture-based enterprise in the Philippines are intertwined, and proper management decisions can impact the tax liability of the enterprise. So it's crucial to be aware of tax laws, tax professionals, tax laws, deductions, and exemptions, and to engage with tax professionals to optimize your tax position while ensuring the compliance with all relevant regulations. Next is income tax. Let's give a focus on the income tax. So the income tax for agri-based enterprise in the Philippines is subject to various regulations and many vary and may vary depending on factors such as the type of enterprise, income level, and location. So the taxation of agri-based enterprises in the Philippines is primarily governed by the National Internal Revenue Code of the Philippines and additional tax regulations and rulings by the Bureau of Internal Revenue. Here are some key points to consider. First is the corporate income tax. So the agri-based enterprise is the Philippines are typically subject to corporate income tax, which is currently set at a flat rate of 30% of their taxable income. So this rate is outlined in Section 27 of NIRC. So the special tax regimes, some specific agricultural enterprises may be eligible for special tax regimes or incentives under the Special Economic Zone Act or the Corporate Code of the Philippines. So these regimes may offer a reduced tax rates or exemptions. Next is income tax returns. Our agri-based enterprises are required to file an annual income tax return. And you need to remember that typically on or before April 15th of the following year and following the BIR guidelines. So these returns should report their income and expenses, and tax is calculated based on the net taxable income. Then, value added tax. Depending on the nature and size of your agri-based enterprise, they may also be subject to value added tax. So the VAT rate is at the 12%. Some businesses may be required to register as VAT taxpayers. And then our withholding tax. Agri-based enterprises may also be subject to withholding taxes on income payments such as rent, royalties, and compensation. So these taxes are withheld by the payor and remitted to the BIR. And also our capital gains tax. So if agri-based enterprises sell or transfer a real property, they may be subject to capital gains tax. The tax rate depends on various factors, including the nature of the property and its classification. So, students, you need to understand that it's important to note that tax laws and regulations change, and it's essential to consult with the tax professionals or the BIR for the most up-to-date and specific information regarding the taxation of agri-based enterprises in the Philippines. And for detailed and up-to-date information of the Philippine taxation laws and regulations, you can also refer to the Bureau of Internal Revenue's website and the National Internal Revenue Code of the Philippines. Additionally, consulting with a certified tax advisor or a tax attorney who specializes in the Philippine taxation can provide you with personalized guidance on income tax for agri-based enterprises in our country. Then let's talk about the goods and services tax. So, as of my last knowledge, update of January 2022, the Philippines had implemented a value-added tax system. So, not a goods and services tax. So, the Philippines follows a consumption tax system, and this includes value-added tax on goods and services. So, the agri-based enterprises in the Philippines are subject to VAT, but they may also be eligible for certain exemptions or preferential tax treatment. So please note that tax laws and regulations may change. So it's essential to consult the latest tax regulations or seek advice from a tax professional for the most current information. So here, I provide you a general overview of VAT for agri-based enterprise in the Philippines, but you should also verify the information with the latest sources. Here we do have a VAT basics or VAT basics. So in our country, is imposed on a sale, in barter, exchange, or lease of goods or properties, and on the sale or exchange of services. Agri-based enterprises involved in the sale of agricultural products and related services are generally subject to VAT. So we do have VAT exemptions and zero rating. Some agricultural products may be exempt from VAT, and certain transactions related to agricultural products may be zero rated. So these exemptions and zero rating are subject to specific criteria and conditions. For example, the basic agricultural products such as our rice, our corn, our livestock, and other items may be exempt if it's uh, meet the criteria and condition. Then our small businesses. Small businesses with an annual gross sales or receipt not exceeding a certain threshold may be exempt from VAT. The threshold may vary and is subject to change based on tax regulations. Then VAT registration. So agri-based enterprises that meet the registration threshold are required to register for VAT and comply with the necessary reporting and payment requirements. So for specific information, you should refer to the latest tax laws, regulations, and guidelines issued by the Bureau of Internal Revenue in the Philippines. The BIR's official website is a valuable resource for the most up-to-date information. And please keep in mind that tax laws can change over time. And that is why it's very crucial to consult with a tax expert or directly contact the BIR to get the latest and most accurate information regarding VAT for agri-based enterprises in the Philippines. Then, let's talk about the tax planning. So, tax planning for an agri-based enterprise in the Philippines, it involves understanding the relevant tax laws and regulations and taking advantage of incentives and ensuring compliance with the country's tax code. Here are some key considerations for tax planning in the Philippines, along with the citation and references to the relevant laws and regulations. First, in income tax, corporations in the Philippines are subject to income tax at a rate of 30% on their taxable income. And however, agricultural businesses may be eligible for a preferential tax rate of 15% on their taxable income, provided they meet the requirements of the Philippine Economic Zone Authority and other designated areas. So this one you can check in the National Internal Revenue Code in Section 24 of 1997 as amended. Then our special economic zones, agri-based enterprises located in special economic zones such as PEZA or Freeport zones may enjoy the income tax holidays, reduced income tax rates, and other tax incentives. So in value-added tax, so this one, the VAT is imposed on the sales of goods and services, and agricultural products and are generally exempt from VAT, except for certain specified agricultural goods and services that may be subject to VAT. And as part of your tax planning, in withholding tax, you need to ensure the compliance with the withholding tax obligations, particularly for payments to employees, suppliers, and contractors. Failure to withhold and remit withholding tax can result in penalties. And in tax incentives for rural agri-based enterprises, may be eligible for various incentives under the what we call the Comprehensive Agrarian Reform Law and the Department of Agrarian Reform. And also in transfer pricing, so we need to be aware of the what we call transfer pricing rules and regulations, particularly in the enterprise as part of the larger group of companies with cross-border transactions. And then our tax compliance and record keeping. This one will ensure proper record keeping and compliance with all the tax filing and payment deadlines. And you need to remember that failure to do so can result in penalties and interest charges. And also, as part of our tax planning is our tax advisors. It is advisable to seek the guidance of the tax professionals, or you may consult who are knowledgeable about the Philippine tax laws and regulations. Always refer to the latest tax laws, regulations, and guidelines issued by the Bureau of Internal Revenue for the most up-to-date information on tax planning for agri-based enterprises in the Philippines. And you need to take note that tax laws and regulations are subject to change, and it is essential to consult with a tax expert or legal counsel for specific advice tailored to your agri-based enterprise unique circumstances. So this is the end of my lecture in this subject matter. So thank you very much for your time, for listening, and I hope that you learned something that will help you in your agri-based enterprise. So thank you very much, and I will see you again on our next video lecture.